Hey, what's up, folks? Welcome back to Cutting Edge Crypto. It's your host, Damien, coming at you with another episode filled with the most cutting-edge, jaw-dropping crypto news from around the globe, and boy, have we had a week filled with it. Whether you're into XRP, NFTs, or crypto regulation, we've got something for everyone today. Now, before we get started, make sure to hit that subscribe button, give this video a thumbs up, and turn on notifications so you never miss an update. You know how fast things move in crypto? Alright, no apologies for this, but today's main focus is on the Ripple appeal and what it could mean for XRP holders. I know many of you out there have been following this closely, and there's a lot to unpack, so we're going to spend some quality time on that. But that's not all. We're also diving into Ohio's new crypto-friendly bill, China's shifting stance on crypto research, and even a record-breaking NFT sale that has the entire community buzzing. Let's get into it. Okay, so let's talk about Ripple. If you're an XRP holder like me, you're probably feeling all kinds of emotions right now. Devastation, uncertainty, excitement, and likely a lot of frustration. And for good reason. The SEC versus Ripple saga has been one of the most talked about legal battles in crypto history, and the appeal is only the latest chapter in this long-running drama. So, let's break it down. The SEC has formally moved to appeal last year's ruling. You may remember in July, federal judge Annalisa Torres ruled that XRP sales on secondary markets did not qualify as security sales. This year, Ripple scored another victory against the SEC when the judge reduced the $2 billion fine requested by the SEC from Ripple to $125 million. So, what's going on with the appeal? Basically, it means the SEC isn't giving up without a fight. And the stakes are huge, not just for Ripple, but for the entire crypto industry, and that's not an exaggeration. Here's what XRP holders need to know. If the SEC wins this appeal, XRP could officially be classified as a security in the US, and that could drastically change the game. Exchanges might delist XRP to avoid legal troubles, investors could be spooked, and the value of XRP could take a serious hit. But it's not all doom and gloom. If Ripple manages to win again, that would be a major blow to the SEC's case and a huge victory for XRP holders. Let's talk best-case scenario first. If Ripple wins, this could pave the way for XRP to be seen as a legitimate asset, safe from the SEC's scrutiny. It would open doors for more exchanges to list XRP and potentially lead to greater adoption by financial institutions. Plus, Ripple could resume its operations in the US without the looming threat of regulatory action. That's a pretty rosy picture, right? Now, for the worst-case scenario. If the SEC wins the appeal, XRP might be classified as a security, meaning Ripple would have to comply with US securities laws. This could make things a lot more complicated for both Ripple and XRP holders. In this scenario, exchanges would likely have to halt XRP trading in the US, and institutional investors might shy away from using XRP. In short, we could see a serious dip in XRP's value and liquidity. But here's the thing. Even with all this uncertainty in the US, Ripple isn't slowing down globally. Just look at their recent moves in Dubai. Ripple received an in-principle license from the Dubai Financial Services Authority, DFSA, to offer cross-border payment services. This is a huge step for Ripple, and it shows that while the US legal system is dragging its feet, the rest of the world is ready to embrace XRP. And let's not forget Ripple's partnership with Meld Gold, which is launching gold and silver-backed stablecoins on the XRP ledger. This is massive because it shows how versatile XRP's blockchain technology is. It's not just about currency anymore. Ripple is making moves into tokenized assets, which could offer a whole new use case for XRP holders. And let's not forget, Bitwise has just proposed a crypto treasuries ETF, and it's raising eyebrows across the crypto space for obvious reasons. For those who aren't familiar, Bitwise is one of the biggest names when it comes to crypto asset management. They've been behind some of the first crypto index funds and have been pushing for regulatory approval on multiple fronts. So what exactly is a crypto treasuries ETF? Well, this is where it gets interesting. The ETF would basically track publicly traded companies that hold significant amounts of cryptocurrency in their treasuries. Companies like MicroStrategy and Tesla come to mind, both of which hold Bitcoin on their balance sheets. In essence, instead of directly buying Bitcoin or Ethereum, you'd be buying shares in companies that are already heavily invested in crypto. Now, why does this matter? First, it gives traditional investors a way to gain exposure to crypto without actually holding it. This is a big deal for those who are still on the fence about buying Bitcoin or Ethereum directly, especially considering the volatility of the crypto market. With an ETF like this, investors can diversify by buying shares of companies that have skin in the game but without the risks of managing crypto wallets or dealing with exchanges. Second, this proposal comes right after Ripple's recent filing, which shows that regulators are starting to warm up to crypto. We've seen XRP battling it out with the SEC, but the fact that this proposal is even on the table signals a shift in how the US might be approaching crypto investment products. We could be on the brink of a wave of new crypto-related financial products hitting the mainstream. Now, this ETF could also offer stability for those looking to get into the crypto market without the wild price swings. Think about it. By holding shares in companies that have both traditional revenue streams and crypto assets, the volatility is somewhat dampened. Plus, these companies have teams of financial professionals managing their crypto exposure, which could give some investors peace of mind. But let's not get ahead of ourselves just yet. The ETF still needs regulatory approval, and as we've seen with the SEC, it doesn't appear to be too favorable with anything Ripple-related. But Bitwise has been persistent, and with the regulatory environment slowly changing, there's a real chance this could go through. So, what's the bottom line for you as a crypto investor? If this ETF gets approved, it could be a great way to dip your toes into the market if you've been hesitant about holding actual crypto. And for those of you who are already deep into the crypto space, this could add a new layer to your investment strategy, offering a balance between traditional stocks and the volatile world of digital assets. So, I know that was a lot of Ripple XRP news to digest, but let me put it this way. Even if things don't go Ripple's way in the US, there's still a lot of potential for XRP on the global stage. Personally, I think we're only scratching the surface of what Ripple can do. But I want to hear from you guys. Are you bullish on XRP, or are you sitting this one out until the legal dust settles? Let me know in the comments. Alright, let's switch gears and talk about something that could actually be a positive for crypto adoption in the US, Ohio. Yes, you heard me right. Senator Frank LaRose has introduced a bill that could allow Ohio residents to pay their state taxes and fees in Bitcoin and other cryptocurrencies. This is huge because it brings crypto one step closer to mainstream adoption. Why does this matter? Well, we've seen a lot of interest in crypto as an investment, but not so much as a medium of exchange. If Ohio's bill passes, it would make it one of the first states to allow people to use crypto for real-world obligations like taxes. And once a state accepts crypto for taxes, it gives Bitcoin and other digital assets a new level of credibility. It's not just something you trade on an exchange anymore, it's something you can use to pay off government obligations. Here's why this could be a big deal for crypto adoption in the US. If one state starts accepting crypto for taxes, others might follow. It could set a precedent that leads to broader acceptance across the country. And let's be real. Paying taxes is something we all have to do, so if crypto can be used for that, it opens up a whole new use case. Imagine being able to pay your taxes, your tuition fees, maybe even your utility bills in crypto. That's a future I'd like to see. But of course, not everyone is on board. Critics argue that crypto is too volatile to be used for something as stable as tax payments. They're worried that you could pay your taxes one day and then see your crypto lose value the next. But hey, volatility is part of the game. If you're in crypto, you already know this and are well used to those price swings. What do you all think? Would you pay your taxes in crypto if given the option, or would you stick to good old fiat? Let's get the conversation going in the comments. Next up, we've got some interesting news coming out of China. Now, I know what you're thinking. China and crypto don't usually mix. After all, China has been notoriously anti-crypto, banning everything from trading to mining. But here's the twist. China's former Vice Minister of Finance has called for more research into crypto assets, right as the US is making its own policy pivots. This is surprising because it could signal a shift in China's approach to crypto. While they've been focused on developing their own central bank digital currency, CBDC, the digital yuan, this new call for research into crypto suggests they might not be entirely done with the broader crypto space. Could China be softening its stance on decentralized cryptocurrencies? Maybe. Here's what's interesting. China is incredibly strategic. They banned crypto mining and trading, but now that the US and the rest of the world are reevaluating its policies, China might be seeing an opportunity to gain an edge in blockchain and digital asset innovation. After all, they don't want to be left behind in a space that's becoming increasingly global. Let's also not forget that China has been quietly supporting blockchain development. Even though they've cracked down on crypto, they've made it clear that they see blockchain technology as crucial to their future plans. This latest call for crypto research might be their way of keeping one foot in the door, especially as they observe how the rest of the world is moving. Alright, art and NFT lovers, this one's for you. A CryptoPunk NFT just sold for an eye-watering $56.3 million. Yeah, you heard that right. This sale has everyone asking, is NFT Mania making a comeback? So here's the deal. This particular CryptoPunk is one of the rarest in the collection, which explains the massive price tag. But this sale comes at a time when the NFT market has been relatively quiet. Remember the 2021 NFT boom when it seemed like everyone was talking about minting, flipping, and collecting digital art? Well, things cooled off for a while. But this sale might just be the spark that reignites the fire. Let's talk about the bigger picture for a second. The fact that someone is still willing to drop millions on an NFT shows that there's still serious interest in high-end digital art and collectibles. It's also a sign that NFTs could become even more mainstream as the world moves further into the metaverse and digital ownership. But is this sale just a one-off, or are we about to see a full-blown resurgence of NFT mania? I'm curious, are any of you still active in the NFT space? Have you bought, sold, or minted anything recently? Drop a comment and let me know if you think NFTs are about to take off again. Now, let's talk about some regulatory drama up north, specifically Canada. If you've been using Gemini, you're going to want to pay close attention to this. Gemini has officially announced that they're closing all customer accounts in Canada. Yeah, that's right. If you're a Canadian crypto enthusiast, you'll need to find another exchange ASAP. So why is this happening? Well, the regulations in Canada have been getting tighter for crypto exchanges. Canada's securities regulators have been stepping up their scrutiny, making it tougher for platforms like Gemini to operate there. And Gemini, being a US-based exchange, probably found the cost of compliance too high to continue serving Canadian customers. Now, if you're in Canada, this isn't the end of the world. There are still other platforms available like Binance or Kraken, but losing an option like Gemini does hurt, especially if you were comfortable with their user-friendly interface and security measures. And this could be part of a broader trend. We might see other exchanges reconsider their operations in Canada if the regulatory climate continues to tighten. What does this mean for Canadian crypto investors? First, make sure you've withdrawn your funds if you haven't already. And second, keep an eye on how the regulations evolve. Canada's been taking a cautious approach, and while that might mean more security for users, it could also limit access to certain platforms and assets. Canadian viewers, how are you feeling about this? Have you already moved to a different exchange, or are you still figuring it out? Moving across the pond now, let's talk about Robinhood's latest move in Europe. Robinhood Crypto just launched crypto transfers across the continent, which is huge for European retail investors. This means users can now send and receive crypto through the app, making it much easier to move assets between wallets and exchanges. Here's why this matters. Robinhood has been a key player in the US market, especially among new and casual investors. Their platform is super user-friendly, and they've been pushing for more features in their crypto offering. Now that they've expanded into Europe, it could significantly boost crypto adoption in the region. Remember, Europe has been a bit more conservative with crypto compared to the US, but things are changing quickly. What I love about this move is how it lowers the barriers for entry. You don't need to be a crypto expert to use Robinhood, and that could bring in a lot of new users who've been hesitant to dive into the world of digital assets. With the ability to transfer crypto, Robinhood users now have even more flexibility to manage their portfolios, trade, and even use their assets in decentralized finance, or DeFi. Alright, so here's the deal. Swift, which processes about $5 trillion worth of transactions every day, is looking to bring digital assets into the fold. If you've ever sent or received money internationally, chances are it went through Swift. But now, they're not just dealing with fiat currencies. They're jumping into the world of digital assets. Starting in 2025, Swift plans to launch live trials for digital asset transactions. These trials will test how blockchain and digital currencies can work within Swift's existing infrastructure, which already connects over 11,000 financial institutions worldwide. Now, why is this important? Well, one of the biggest challenges facing crypto is mainstream adoption and integration with traditional finance systems. Right now, if you want to move digital assets across borders, you're dealing with a patchwork of exchanges, wallets, and blockchains. It can get messy, and not to mention, expensive and slow. But with Swift getting involved, this could all change. We're talking about the potential for seamless cross-border payments that include not just fiat currencies, but also digital assets like stablecoins, CBDCs, and maybe even your favorite cryptocurrencies like Bitcoin or XRP. Here's why this matters. First, Swift's involvement could make crypto transactions more secure and reliable, especially for institutions. Right now, one of the big hurdles for crypto adoption is regulatory uncertainty and concerns over security. Swift is already trusted by governments and financial institutions worldwide, so bringing digital assets into their system could legitimize the space even further. Second, this could lead to faster, cheaper international transactions. One of the key selling points of crypto is its potential to make cross-border payments faster and more affordable. If Swift can integrate digital assets into its system, we might see transaction times drop from days to minutes, with lower fees to boot. And third, it could boost global adoption of digital currencies. With Swift's reach, even smaller countries or banks that haven't been heavily involved in the crypto space could start to experiment with digital assets. This could open the door for more widespread use of cryptocurrencies, especially in international trade and finance. Swift has already successfully demonstrated that it can transfer tokenized value across public and private blockchains, interlink central bank digital currencies globally, and integrate multiple digital asset and cash networks. The new trials will explore how Swift can provide its community of financial institutions with a single window of access to multiple digital asset classes and currencies, paving the way for their integration into the wider financial system. This shows that the future of finance is going digital, whether regulators, banks, or even crypto skeptics like it or not. What does this mean for you? Well, if you're in crypto, this is great news. It's another sign that mainstream financial institutions are taking digital assets seriously. And if you're someone who deals with cross-border payments, this could mean a future where sending digital assets internationally is as easy as sending a regular wire transfer, but way faster and cheaper. And now, we need to talk about the ongoing fallout from the FTX collapse. It's been a couple of years since FTX went under, and creditors are finally starting to see some recovery, although I'm sorry to say it's not much. According to the latest reports, FTX creditors will only get back 10 to 25% of their crypto holdings. Yeah, that's a hard pill to swallow if you had significant funds tied up in FTX. This news is disappointing but not entirely unexpected. When FTX collapsed, it became clear that the mismanagement of funds would leave many creditors with only a fraction of what they'd lost. It's a stark reminder of the risks involved in centralized exchanges, especially those that aren't transparent with their operations. And while some creditors are grateful to get anything back, many are understandably frustrated that they'll only see pennies on the dollar. On a related note, let's talk about CZ, the CEO of Binance. Amidst all the legal scrutiny surrounding crypto exchanges, CZ seems to be walking free for now. Despite being under intense regulatory pressure, including a U.S. investigation into Binance's practices, CZ hasn't faced any serious legal repercussions. Is this luck, or is Binance just better at playing the regulatory game than FTX was? It's an interesting contrast. While FTX's leadership faces legal battles, Binance continues to operate at full capacity. But don't get too comfortable, because regulators are watching closely. CZ might be safe for now, but who knows what's coming down the pipeline for Binance? Alright, cutting-edge crypto fam, that's all the time we've got for today. We went deep into Ripple's appeal and what it means for XRP holders, touched on Ohio's crypto tax bill, China's surprising shift on crypto research, and even a record-breaking NFT sale. Plus, we covered some big moves from Gemini and Robinhood and checked in on the latest with FTX creditors and Binance's CZ. It's a wild time to be in crypto, but that's why we love it, right? As always, if you found this video helpful, make sure to like, subscribe, and hit that notification bell so you don't miss any updates. And remember to share your thoughts in the comments. I love hearing from you all. And if you'd like to keep the conversation going, why not consider joining the Discord? Link is in the description. Well, until next week, that's all from me. And as always, stay curious.